Let's talk about risk. Hey, it's Shooter. Hey, we're going to take a look at equities and the dollar today. Of course, please do review our disclosures after this presentation. At this point, we had a three drive that occurred, from June, July of 2020 that ran all the way through 2021, July. So, we had leg one, leg two, leg three, and then we retraced 100% of the move. And that's ultimately why I like three drives and I like to watch them, is because they do have the chance of a complete retrace from 100% of the move. So, most bottoming or topping patterns are either XABCs, which is 1-2 drives. And then three drives, of course, occur as well. Now, actually, when you look at this, I'm counting this as a three because it was below the one, but, it could also be considered an XABC, but it didn't get extended quick enough to really be considered that. So that's why I'm looking at that as a three drive. So right now we're looking for a target of about 105 on the Dixie, and then we're looking for it to break down. And honestly, this push up is why equities are red. Now, right now, this is pretty much my bias on equities. I take other factors, such as Bank of Japan printing money, China printing money. They just put out 632 billion last week. That's going to come into markets Tuesday or Wednesday, I think. And our last little rally that we had in equities, this little push up here really was because of prior money print. Okay. So, and then of course that ran out and boom, we came back down. So, we could push up to this 475, I think, with no problem, because I'm not recalling what the other amount was that they printed and threw into the system, but this one is 632 billion. I think it's one of the largest amounts that they've done. So, all right, back to the basics a little bit, because what I'm going to try and do is sort of incorporate a little teaching here into my short videos here so it can benefit you guys. Now, I use my HCL bars to measure my supply, support and resistance, which our supply and demand very can. I use the weekly chart, and basically just an HCL bar is a single wick that comes out, which basically presents the close. So right now, this is my resistance and this is my support zone, which is very busy. Okay. And ultimately our, world's ending support is way down here at 250, 200. So looking at the count here, we're in a primary wave up until that changes. So, we're going to come in and I have my numbers wrong here. I don't know why I do. Maybe it was because I'm on the weekly. Yes, it was the weekly. Okay, wait a second. I have to watch my time frame. So we're looking at an ABC down to 391 on the weekly. And I was looking at the monthly before, forgive me. And then we're going to come back up here and shoot towards about 461 for our target 2. And then we'll get a back test down to about 434 for a target 3. Then we should continue on a little bit longer. So, looking at how this is laying out, our next intermediate wave long should be that 391.40. So of course, looking at that, we want to, of course, position ourselves accordingly. I think a little bit of risk off. This speed line that I'm drawing, I'm considering this divergent low. This is our confirmed low. All right. So I'm looking at these two as our bottoming pattern. All right. I do not believe we're going to put in another divergent low here with the way our RSI is reading. It looks to me like it's upticking here. And quite often, I look at RSI 2 like I do Elliott Wave. I'm looking for 3, 5s, and 8s. So 1, 2, maybe 3 up around here, which would be higher, which would indicate that we're going to push a little. So looking at that, until we close below that 387 on this particular speed line, I'm not really concerned about the downs. Just my thought. It just too much is going in the right direction. And I think what Bank of Japan just did, the Chinese did with the yuan was 632 billion. I think is just fuel on the fire for us to get up here and retest these highs in that particular zone. Now, let me come in and, my speed line or not my speed line, but, again, I view Elliott Wave as a cycle program. So I'm looking for 1, 2, and then we're looking for a third up here at a later date, maybe around 600 with a back test around 477. So that ultimately, since I view Elliott Wave as a cycle program, I'm looking at my larger time frame much more than I am my shorter time frames, even though I'm basically a scalper. But the reason I'm doing that is because I want to make sure the big picture is there for me. Where am I wrong to the upside? Where am I right to the downside, as an example? And honestly, a break below that speed line gives me some pretty significant conviction to back testing 358 or lower, maybe even 342. So, at that point, that has to break down. We have to do the same thing where we're testing our highs, overshooting, breaking down, back testing. This is your sign, that back test, that lower high to get short, and obviously if we have a count that supports that, we want to look in those directions. But we're looking for, again, that target one of around 391.40, target two around 461.85. And then when we backtest maybe 343, then we should continue up and put in our five around 521.27. So now, the one thing I want to emphasize, again, there is no timeline in Elliott Wave. So we could do this, put this in here, our broadening pattern tightens up, which is not uncommon, by the way, with Elliott Wave, where that final hump just really tightens up like this. So, that time extension to me is just something that's noise, because I know what I'm looking at when I look at a chart, but you guys don't. So I wanted to explain that to you a little bit, so you understand that, I'm incorporating a number of things when I take a look at this. And, I'm always looking for, this is a confirmed low. At some point, we're going to get a divergent low, lower low, but I think it's going to be well after this 521. So, a lot of these people talking about a blow off top, I can visualize that with the counts that I'm looking at. Now, how I measured that, let me jump over to my next chart, because I did not put a volume profile. For some reason, I have a very difficult time in after hours running volume profile on multiple charts when I'm dealing with as much time as I have here on the NASDAQ. So similar look with the NASDAQ, which ironically, the SPY, NASDAQ, Dow, and IWM all put in a low on the same day and a higher low on the exact same day. Well, that sort of signals some type of manipulation, maybe, or the people who really control this market have that much control. Hey, we'll leave it to the powers to be to decide which that is. But looking at the cycle, trough, peak, trough, again, I've measured from March 23rd, 2020 to October 13th, 2022, come up 908 days. Now, just so you guys can understand how to format this, I have done this basically using the time range 968, and then I use a tick interval of 10. So if you want to duplicate those cycles in your look, that's something that you can do. One reason I believe wholeheartedly in Elliott Wave, I think it gets us 70% of the time on the right side of the fence or more. And I'll give you an example. This setup here to the long side on the NASDAQ, our weekly trigger, and I realize in my primary wave setup, I have a 90-day, a daily, and a weekly trigger. Just assuming we bought at our 90-day trigger and bought on our weekly trigger and sold on our weekly sell, this captured 83.6% of them. Now, by no means am I claiming that that'll ever happen again, okay? Because one, I would be a fool to do that with regulators out there, but very candidly, that primary wave setup is one of the few setups that work better than 60% of the time, 70% of the time, quite often. In this last little bear market, we had a number of charts that turned, but we knew they were turning, and we didn't get killed when we pulled our stop and got out. So, that's half the game, is to know when we're in a trend and when to ride it, and then know when to get out. And that's ultimately what we're trying to do here. So now the count, as far as the NASDAQ is concerned, it has broken down. In other words, we got rejected up here at the supplied top here, right in this zone. It didn't like it. There weren't buyers up there for whatever reason, and it flipped to the downside. Now, last week we had an upside count. So now we can flip-flop around here for quite a while, because it's going to be based on these groupings of these candles and how we're scanning those counts, come up with those results. So it can be dicey, and this is a very difficult time because volumes are crazy. But I can tell you one thing, hedge funds are buying, and they're buying in significant volumes. Some of these option blocks that they're buying is incredible, right? We're looking for 293.64, then maybe a little bounce to 297, and then break down to around 292.44. So we're in that $5 type range there for a while. It could be choppy there. We could stay there for quite a while. We could stay there all the way through October, to be candid. And it wouldn't negate any of the views that I have here. Now, the other thing, too, I want to point out is we look at our regular volume. Look where our sells are and our consolidation of our candles and how extreme they rate. Basically, you can look at your prior history and notice how our volume's up, volume's higher than here, volume's higher here coming out of this. So this implies to me our sell is over, a little more selling here, but we really sellers lost interest here, as far as I'm concerned, because it's not any of these. We're not pushing up on these candles like we were here. So, we're getting greener, we get greener to the upside, this back test, you look at every leg, greener, and plus those volume candles come in. This is all the commercials coming in and buying here. It really, they've been, really dictating, I think, both the ups and downs here. I think they're coming in and, at the lows, they're covering their puts, and I think they're selling one heck of a lot of premium here with what's going on, because they're moving the markets pretty aggressive. So we're seeing these little short squeeze comes out of, I expect to continue to see that. So, this really isn't that much of a squeeze here. So maybe we break down a little bit further than this and then keep going. That's something that we could do. So I'm not really convinced that we're going to stay to the downside. I'm going back and looking at the dollar here and what it's this is a divergent, downside to the S&P for me. And the fact that we're rejecting the 50-day and have already come off on this weekly candle, this next candle is probably going to be red and lower, and we're probably going to continue lower. So that's what I have, folks. Great trading until next time, and please do review our disclosure.